Hello traders at CMC Markets. Welcome to another update by RRG Research for Monday the 9th of January. I'm recording this in London on the 6th of January. In today's session we're going to start by looking at the global stock indices, as we always do from a long-term and shorter term perspective. There's a striking message again here of a division between Europe and particularly the tech-heavy indices. Also, we had picked up in early December the bounce in the Seng, and that has followed through very, very strongly. We'll look at the daily version of the RRG2. We'll look at the indices. We'll look at the Seng. We'll follow up on the stocks that we focused on in December as potential breakout stocks that weren't already underway on the upside in the Seng. 3 stocks we looked at there, and 2 of them I'll go to in some detail. And then finally, we're going to go through the situation in the US dollar and the G7 currencies and the euro in particular. First, we'll look at the relative rotation graph with a weekly sampling of major global indices, and there's a couple of very obvious messages here. The first is what is in the lagging quadrant and what is in the leading quadrant. The Nasdaq, S&P and the Russell 2000, also the Nikkei, and pointing southwesterly in direction. Westerly means weakening on a relative basis to the MSCI World Index, and southerly also with low positive momentum of relative strength. And so looking poor and looking like they're getting worse. In contrast, up in the leading quadrant here, we've got the DAX, the stocks and the CAC index, and they are pointing generally northeasterly in the opposite direction. Easterly, this means of course strengthening on a relative basis versus the MSCI World Index, and northerly with increasing momentum, good and getting better. The weakness that we see here is much more determined, just sweeping with long tails here. Here we're switching around and regaining a degree of strength. We notice the Dow Jones Industrial Average, which we featured before, which amongst the US indices, this narrowly based industrial index, low in technology constituents, is performing relatively well. But there's a clear message: Europe good, United States bad. Then the other message is that the Seng, something that in December we picked up, that after having a year of terrible performance, the opportunity for a big bounce was considerable, and we're seeing it now. And we picked some stocks, named stocks that we like the look of, that looked like they had potential for big breakouts, and we'll follow up on that, and they have had the big breakouts that we were looking for. It's worth noting, on a daily sample perspective, we've got a similar but not exactly the same message. Up here in the leading quadrant, we've got the DAX, the CAC and the stocks, also the Dow, but also the FTSE, the UK 100 has also joined there. The Seng is right furthest over to the right, so it's not up here as it was in the weekly sampling, but it is furthest to the right. Short-term strength moving in the northeasterly direction, so we've got a long-term and a short-term relative strength message here. And then in the lagging quadrant, we've got the Nikkei as we had before, we've got the Nasdaq, but here the Russell and the S&P are in the improving quadrant, but not particularly strong messages there. So basically no contradiction in the short term, in fact in some cases reinforcement of the longer term messages. The first graph we're going to look at is the Nasdaq, or the Tech 100, and this is a weekly sampling. The first graph we're going to look at is of the Nasdaq, or the Tech 100, and we have noted this downward channel on the weekly chart here, and we have really been contained by it all through 2022. At the start of 2023, we're testing these lows here from October, and we're worried that potentially we could be headed below 10,000 to around 9,750, where we pick up the first support if these lows are broken. So we're going to have a look at this in a bit more detail. But one thing to note is here we've got a low, we've got low, lower low, lower low, lower low, lower low. But here we've got the confirmation of that pattern here, but then a higher low on the weekly MACD. Likewise, in the RSI, yes, we've got lower highs pattern, all confirmed high, lower high, lower high, lower high. But here we've got a low and then a higher low. So if we were to break 12,000, for example, we would have confirmed bullish divergence in place. But of course, we're at 10,700 at the moment. So let's look at this 10,000 and below level and the 9,700 support level. So we'll magnify down into the daily chart. Now looking at the daily chart in detail, we can see in this blue line here at 10,000, 11,000, the round number. This was also a series of highs and lows from the summer of 2020. These have been probed, returned above, probed, broken falsely, to returned above, broken falsely, and then looking weak as I do this on Friday. We've got a series of 3 lows in here at 10,700 approximately, which are under threat. The daily MACD is negative here, and so we've got some force on the downside. It seems likely that the pressure will be too much for this market, and these lows will actually give way. Then, as we've already seen, that the next level is the round number of 10,000, but in fact there isn't a lot of support at 10,000 apart from the psychological, and I would expect if it does tumble next week, for example, breaking these lows here, the 10,700, then we could tumble through it and then come and test the support at 9,700 that we were looking at a moment ago. So lots of danger around, more pressure likely in this tech heavy, more more correction of all the excesses of the previous years in the technology stocks. Seems likely. Moving now to the other quadrant, the leading quadrant there, the Hong Kong Hang Seng Index. Is a daily chart of it. All of 2022 we were going down in this sort of channel. The lower level was a bit indistinct, a bit of overrun on occasions, but a good set of matching highs as we declined in the market all through the year. But we saw at the end of the year that it looked as though we were testing this downward channel, and we saw the relief of pressure, the substantial bounce potential that we had in the RRG chart, and it was indicating that this was starting to be underway. A index, the index that we hit was, all through the year, the worst. Looking one on the relative rotation graph suddenly turned around and offered, this is where you get the outperformance potential, is by picking these not in favour securities, not buying the ones which are already in favour, but buying them at the early stages. So we picked it up early, and we're going to go through that a little bit and follow up on the stocks that we mentioned back in December. But here it was, we were watching carefully this downtrend line. We had the breakout, the retest, and then now over the holiday we have powered ahead strongly. The RSI, the MACD has come up strongly, and then we've got a new high buy signal. Some people say, well, you should ignore these, but why? This is a strong market getting stronger. It's a strong message. Looking at the RSI, you see how strong that is. I know it's reading 80, but it's got to 80 because it is strong, not because it's weak, but it's strong, and it's testing these highs in here. It's got a lot of power on the upside. The next resistance for it is 22,400, this resistance line here, and then a series of highs and lows going back into 2020 at 22,900. So that area here, 22,400 to 900, is the resistance, and we're powering and surging towards it at the moment now. So we're in that very impulsive stage. It is a reaction, of course, to the downtrend. It will meet layer after layer of resistance on the way up, but it's in that powerful stage where it's dawning on people that the bear market is over, and this market has already gone up from 15,000 to 20,000, and a lot of people still in their minds are seeing it as Hong Kong is very bearish. It's not. It's very bullish at this stage. So we'll have to see how it progresses, particularly when it gets to this first significant levels around above 22,000. Now we came up with 3 particular securities. We like the look of the charts, all at potential breakpoints. These were Alibaba, ANTA Sport and HSBC, and I'm going to do 2 of them today, Alibaba and ANTA Sport, follow up on them. They were slightly delayed in their breakout, but they've surged ahead very, very powerfully, breaking clearly from the 85 support level and the uptrend line that was in play here, powering through 100, the round number, looking like they want to go up and test the 120 in this Alibaba. The MACD here, you can see, came up with the price, paused in here, but has given a new buy signal at a high level, and as I said before, a positive buy signal with the MACD crossing its signal line at a high reading generated because the market itself is strong. It's a resumption of the uptrend. More to go on this one. It looks like resistance at 120. We have to see what happens at 120. The resistance is pretty significant, and obviously with a long downtrend here. This started before the beginning of 2021. We've got lots of layers of resistance on the way up, but it looks as though it's at least an intermediate term bottom is in place here, and if we break through the 120, then I think that we can say a major bottom is in place and a downtrend has become an uptrend. Now we're looking at a daily chart of ANTA Sports Products Limited, and the significant level, very significant level, was the big round number of 100. 1, 2, 3, 4 tops in place there. We said it could release a surge of energy if this gave way, and it has given way, and we've gone literally 10% up in very short order up to 110. There is some resistance here now at 110, but and it extends all the way up to 130, but there's a lot of power in this market. The MACD is very positive indeed, and the RSI here, yes, we've had a down candle in the last session, but it's still looking strong with higher lows in place here. So it does look as though this market has got a lot of power behind it, but has reached its first resistance level at 110 and has been rebuffed at 110. I don't think it's the end of it by any means at all. I think if it comes back, it will be well supported at 100, and that would be quite an attractive place if you get it, but I think the uptrend is so strong that we might not get it. So watch this one closely, because this one is one of the ones that hasn't shot ahead of itself like the others, and may offer potential on pullbacks. Now, moving to the currencies. We're going to start with the euro. this is a daily chart of the euro, just to show this heavyweight. All of 22 was not all, sorry, and until the last quarter, 3/4 of 22 was dominated by US dollar strength. That is, and it must be said that the euro went down a very regular channel. It was quite sort of obedient in behaviour. False breakout, return, then final breakout here. This congestion and uncertainty around the parity level, but we had these higher lows in place, and the RSI was very constructive. Then we soared away, had a powerful move in November up into this double top formation, which has broken down and is close to actually its minimum price objective. So we had a very nice little chart pattern here, and the dollar strengthened again after this period of weakness in here, and we see the RSI has corrected substantially. So let's have a look at this now on the relative rotation graph. So the background picture is after 3/4 of a year of dollar strength, we had a last quarter which was dominated by dollar weakness here, then ended with a double top, and then at the moment we've got a little bit of dollar strength. Now this is a weekly relative rotation graph, so this goes back 1, 2, 3, 4, 5 weeks, and so in the double top formation period that we've seen in the chart, here is the euro. The euro is furthest to the right versus the US dollar here, and also most currencies except the Canadian dollar, the commodity currencies, are in the leading quadrant. Here's the euro, New Zealand dollar, interestingly, Swiss franc, yen, pound, just blunting a little bit, and the Scandies over here. But the euro, the strongest of them all in this longer term context. I know we've seen it weaken off on the daily chart, but in the bigger picture it is still relatively strong and still heading easterly, so generally still strengthening, which will be interesting if the double top has reached its minimum price objective. It's interesting to look at the chart on a weekly context, so remembering the double top formation. This is the last 5 days, so this is the sell-off from the double top. So here we see on relatively still right of the dollar itself, so relatively strong, but the direction is westerly and it's in the weakening quadrant. So that shows exactly what it is. In the longer term, it's doing well on a relative basis, and actually best of all the currencies, of the G7 currencies. But here on the shorter term, with moving down from that double top, it's still relatively strong, but it has moved down and it is weakening in a shorter term basis. And so this is the great thing about the relative rotation graphs, because it can show that in all of these charts, if you like, the picture of them in one picture. So here we see the Scandies very weak, we see the pound relatively weak, and New Zealand dollar also, and nothing is, apart from the Australian dollar, exceptionally the Australian dollar, which is heading northeast in a shorter term basis, but everything else is weaker against the strengthening dollar, like the picture of the double top in the euro. So let's go back to the euro again now. Looking closely at the double top formation in the euro, we've got the two highs pretty well the same, only a little spike above. The neckline break was at 105.70. It's broken, and then 104.25 is where the minimum price objective is. So we're 105, so still another whole big figure to go. There it does pick up some support. You could argue that this is an ascending triangle here, but also the very significant and notable 103 level is just below it there. We have had a breakdown in the RSI. We had an uptrend line in here that I drew, and we broke it, and that was triggered as we went through the breakpoint of the double top. And the more intermediate term message from the MACD is we crossed over here on the 16th of December inside the double top itself, and it's going down and the gap is widening, so the momentum is increasing on the downside. So the overall message of this is that the double top is still in place. It hasn't reached the minimum price objective yet. That's 104.20. I think I did say at the beginning it's close to it, but it's still got another whole big figure to it. There is support around there. There is considerable support around there, 103 and slightly above the level. So I would suggest that it's likely that it would at the very least hesitate or indeed bounce there. However, the pattern of rising lows is still very much intact, and only a break of 103 will change that. So many traders might look at this as actually a buy opportunity for the euro. Not here, but potentially lower than here. This will improve the risk reward. A lovely place to sort of protect yourself would be one of these two lows in here, but of course the difference between here and there is very large at the moment, making it too much of a risk. And anyway, there's no sign of a bottom yet. It looks as though the bottom is likely to be lower. So we'll be watching this very closely indeed, particularly just above the 104 level, where we have some hopes or expectations that the euro will stabilise.